Trade with clarity. Most traders get burned on trendline breaks for one reason. They watch price and ignore participation. Let me show you something quick. On this first clip, the break closes strong, volume expands, and price actually holds. Now watch this one. Volume is high too, but the candle leaves a big wick against the move and closes weak. Same idea, totally different outcome. That's the theme of this whole video. Volume helps, but the candle close and structure get the final vote. We're talking futures, we're using trend lines, and we're keeping it simple. Candles, structure, and volume. No delta, no profiles, none of that. Volume is just participation. How much trading happened in that time window. It doesn't tell you who's right. Every contract has a buyer and a seller. And quick note, I keep my volume bars one color, blue. I don't want you thinking green means buyers and red means sellers. That's not what volume is. Volume is just activity. Direction comes from where price closes and how structure reacts. Here's how I want you to think about volume with a trend line. High volume can support a move, sure, but high volume on a bad candle doesn't override the close. If the candle breaks the line, then leaves a wick back through it and closes weak, that's a warning. That's effort with no result. On the other hand, if you get a clean displacement candle, body close through the line, closing near its extreme, and volume expands relative to the last few candles, that's a very different look. So don't focus on volume. Use it like a flashlight. It helps you see what's real, but the candle still tells you where price actually ended up. Volume only makes sense if you compare it correctly. Overnight is its own session. Treat it like its own baseline. Don't compare a quiet overnight bar to the open and call it low volume. That's not fair. When the main session opens, volume usually jumps. That's normal. Don't compare it to overnight. The open is almost always loud, so I don't grade volume off the very first candle or two. My simple rule, let the first 15 minutes pass, then start comparing. On a 5-minute chart, that's your first 3 candles. After that, volume comparisons get a lot cleaner. And one more thing. Scheduled red folder news is an outlier. If there's a spike, I'm not using that bar as my reference. That's not participation you can learn from. That's a separate case, so I don't use it as my baseline. Most of the time, it's a no-trade moment until structure calms back down. Now let's make this practical. You don't need to stare at volume for 10 minutes. You just need a quick baseline. Look at the last chunk of volume bars, call it the recent cluster. You're asking one question. Does this bar stand out or does it blend in? If the break candle volume is clearly taller than the recent cluster, that's expansion. If it's about the same height as everything else, that's not confirmation. That's maybe. And on a trendline break, maybe is usually a trap. Before we even talk entries, we need clean trend lines. Wicks only. The line should be anchored to wick touches, and I want at least 3 touches before I treat it like a real line. Then, watch what happens as price approaches. If you see compression into the line, smaller candles, tighter ranges, volume drifting down, that's the market coiling. That can set up a clean break or a clean bounce, depending on context. Quick micro example, because this is the one that wrecks people. Here's a break candle that closes through the line, so it looks legit. But volume is low, or basically the same as the recent bars. Nothing stands out. That's not confirmation. And you'll notice what happens next. Price slips right back inside. That's the market telling you the break wasn't supported. All right, breakouts. A good trendline break has 3 pieces. First, a real candle close. Body close through the line, not just a wick poke. Second, displacement. It should look like price actually pushed, not like it barely crawled over. Third, volume expansion relative to the recent cluster. Now, even with all that, I still want one more thing. A hold. A lot of people say always wait for a retest. I agree, most of the time that's the cleanest entry, but sometimes it doesn't retest right away. Price can run. So here's the patience rule. If it runs without retesting, you don't chase it. You let structure rebuild. Once a new swing forms, you redraw based on the new information. Trend lines are structure tools, not prediction tools. Also, check what's right in front of you. If the next support or resistance is close, the break has no room. And I use a simple filter here. If the space to the next target is less than 1-to-1, it's a skip. You're forcing a trade into a wall. Now, bounces. A good bounce is basically the same logic as a good break, just flipped.
Price tags the line, you get a rejection wick into it, and the candle closes cleanly away. That close matters. A bounce candle that closes weak or closes right on the line is not a bounce. It's indecision. Volume on the reaction candle can help you here. Supportive volume with a clean close might mean the line actually mattered. But watch the warning sign. High volume with no progress. If volume spikes at the line but price doesn't move away and you get messy overlapping wicks, that's absorption. That's a no-trade look. Retests are where a lot of the best trades live because they're organized. After a break, I want to see the pullback happen on lower volume. That tells me the counter move is weaker participation. Then the retest itself. Price tags the line from the new side, holds, and prints a candle that closes back in the breakout direction. Clean? Simple. And then the best final clue. Volume returns on the continuation push. Not always huge, but you want to see participation come back when price moves away again. Now let's lock it in with real clips. Watch the same checklist repeat. Clip 1. Clean break and hold works. Strong close through the line, volume expands, pullback is lighter and it holds. Clip 2. High volume wick fail. Big volume, but the candle leaves a nasty wick against the move and closes weak. It doesn't hold. Clip 3. Third touch bounce works. 2 touches already, third touch tags the line, reaction closes clean, volume supports it, and price moves away. Clip 4. Break, retest, continuation. Break volume expands, pullback volume contracts, retest holds, then volume returns as price pushes again. Clip 5, 1-to-1 filter saves you. Break signal shows up, but the next swing wall is too close. Not enough room. Skip it. And you can see why. That's the whole framework. Keep volumes simple. Compare it correctly, let the candle close and structure lead, and use volume to confirm participation, not to predict. If this helped, subscribe to Arctic Wolf Trading. In the next video, we're adding top-down analysis so you get a higher time frame directional filter and stop taking trendline setups into the wrong side of the market.